Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Rolling into the 11th day, the Australian dollar has continued to trade sideways, although still remains parked above the level of 67.40.45. From a technical perspective, the market is still swaying to a somewhat bullish stance, but at present there is still concerns that we may fail to reach that region due to the fact is that the market is just totally ignoring the current pattern and instead does look like it might pay another visit to the downside of 67.40.45. Earlier this morning, the Australian dollar seemed unfazed after the US Federal Reserve released the minutes of its July 31st meeting, which has shed more light on the decision of its recent interest rate cut for the first time in more than a decade. The minutes revealed that most policy makers believe the decision to the benchmark federal funds for the first time, that is, of a cut since 11 years ago, was part of a mid-cycle adjustment and possibly a policy recalibration and not beginning of a series of deeper rate cuts. The other thing as well is RBA Governor Phil Lowe was reported saying this week in a private business event that the trade war between the US and China was the single biggest threat to the global economy. The trade tensions are harming global investments, wages and economic growth, Governor Phil Lowe said at a business event in Sydney. I do not have a clear idea of what strategy the US has. Dr. Lowe said that citing news that the attendance of the outlook is still a little bit puzzling. But from a technical point, as I mentioned, we're still locked within these parameters of 67.40 to 68 figure 45. I would look towards adding new short positions towards this region. And if we get a break at 67.40, the target is at 66.20 to 45. Well, the euro, still a little bit of a question in terms of where the next direction might be. At present, the base is still comfortably holding at 110.20 to 60. The pattern over the last 4 to 5 trading days has gone sideways. It's still lacking for direction, but this all could change this Friday when we have the Fed Chairman Jerome Powell is expected to give us a speech on terms of what the next move might be in rates. And the market has priced in a September cut, but at the Jackson Hole Economic Symposium in Wisconsin on Friday, the market will be clearly eager to see what the central bank is thinking. We could see a cut in September, but at this moment in time, it doesn't warrant it because when you look at the figures that are coming out of America, you've got 50-year low unemployment rate, you've got pretty good retail sale numbers, good job numbers. I feel that the market is just under pressure from Trump. So, because he wants 100 points cut, he wants to see the interest rate drop from 2 to 2.25% to 1%. But the Fed is not holding that view. Also, that was interesting is that the euro did shake off the announcement of Italy's Prime Minister's resignation. So there's a little bit of a mixed outlook, but I believe the market may be posing a threat to a rebound from this 110.20 level. Until we get a break, then we could see a bounce back towards a region of 111.45 to 111.90. But beneath 110.20 gives me a target of 108. Well, dollar yen seems to be taking its time in taking the challenge beyond 106.80, with the resistance still locked in pretty much there from 80.90. I believe the market's found a cap and could see a pullback towards the bottom side of the range of 105 and reassess from there. The pound, not as bullish as it was recently and still lacking direction in terms of the bull case that is at this stage supporting the move, but the market doesn't seem to be as reluctant in terms of where to go next. So let's see. Range at the moment still seems to find a target of 122.15.35 and support at 121.05. Gold a little bit weaker, but from a technical point, so we had some divergence first of all from here, and then we had a sell-off, but the market's not quite pushing to the downside. I still feel there's room at least towards 1,488 to 90, so do be on your guard. And if you are looking to buy the dip, this market could even go down as low as 1,474, where I've outlined here. I'm not a bear. I'm looking to buy on opportunity of a dip. So let's see. But I'm not going to rush in case 88 doesn't hold, and we could see another drop of at least $10 to $15 towards this base, and then see a recovery from there up towards 1,530 to 35. Finishing off with the oil, well, the market posted a dragonfly doji. Some of you aren't familiar with that. From a technical standpoint, the posted dragonfly doji has triggered uncertainty into the recent direction. As with any dragonfly doji, the market does suggest that the indecisiveness could see weakness from this level around the trigger cap around 56.60. A break above there will give the bull move to 58, but with the dragonfly doji in place, does suggest that supply and demand is at an equilibrium, which is a little bit indecisive where the market goes. A dragonfly doji candle forms when the open and close price of the candle sessions are equal. And you can see they are. So let's see how the market plays. To get a negative call, then the market wouldn't need to take out 54.40. But until then, we could see a rebound because, as I said, indecisiveness in where we are at the moment. From a technical point, a little bit mixed too. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the great start to this new day.